JJ the CPA here. Hope you're doing well. So we have completed 4 weeks of tax season, which means we have 11 left. It sounds like a lot of time, but it's going to sneak up on us, that April 18th deadline. I do put together a weekly wrap up, but in that today, I'm going to talk to you about things to anticipate in the coming weeks, including refunds, how to check on it, things related to cryptocurrency, small business, S-corps, partnerships, those that are looking to get tax credits. Also, I have a weekly video that I've put out the last 3 weeks at this point, so you need to go back and check those. I've got a link to a playlist that's called Tax Season. So I'm going to be giving you additional ideas, and I'm going live to do one thing, answer your tax questions. So be looking for that as well. So here's where we're at. You should have all the tax documents that you're going to get from third parties, employers, banks, those that you have loans with. Now, the one thing that we're still waiting on for February 15th would be the annual tax statement from your brokers. But if you don't have the other tax forms, then look in your email, or if you have an online account with them, then log in, take a look. Don't wait, call them if you still don't have that, because you don't want to be sitting around waiting to file your tax return. One of the reasons why is that there is a much higher chance of fraud related to those that are filing tax returns, especially for those that have easier returns or don't file as often, or maybe they just have a one W-2 type tax return, which many times can include the younger generation or those that are in college. So if you can file, if you can get those tax documents together, then you should get it taken care of. The IRS does have a free file system that I'll give you a link to. Always better to file with a tax pro, in my opinion, once you get beyond just a couple of tax forms related to employment, so that you can ensure that you're reporting everything properly, as well as getting any tax deductions and credits that you deserve. So the IRS has put out a suggestion here recently that I'll give you a link to that talks about how to go about finding a proper tax pro. One of the things to look for is that they are registered with the IRS, which actually is required. They need to have what's called a PTIN, a Preparer Tax ID number. And believe it or not, it's public information. I'm going to give you a link to that you can look up that name and their address. And at least you know that they've been complying with the IRS by filing. It doesn't necessarily mean that they're any good. So try and find somebody that is reputable. How would you know that? Somebody that has used them before. So check with your friends, maybe ask on social media for those in the area, people that you trust. But here's the reason I'm going on about that, is that you want to find somebody new if you don't already have one, because good tax preparers already have their client list. Good tax preparers are not now giving out free hot dogs on the street trying to lure you in. So do not wait. Get in with somebody. If you don't have an appointment set up, but you do usually meet with your tax professional, well, then anticipate when you will have everything ready to then set up an appointment now. Don't wait until you have everything ready to set that up. Fellow tax professionals, same for you. If you have clients that you know that you need to sit down with them, don't wait until they call you or until they have all their tax documents. If you set a time with them now, then guess what? Hopefully that'll be a deadline for them to have everything ready for you when you set that future date in place, and also for better management of your time. One of the other things that when you're looking at getting tax returns done, whether you're the tax professional or the taxpayer, the small business owner, the sooner you can get the results, then you can double check that you've taken advantage of everything. How do you do that? Asking questions. So for those that have somebody prepare your return, hey, ask anything I'm missing, anything that you see I'm overlooking. When you're now a tax professional, ask the additional questions. We don't want to necessarily just accept what was provided, because it is your tax return. It is your responsibility, as well as for tax professionals. It's their tax return. So going through everything sooner rather than later then allows for time to ask questions and to follow up. So with this, what is my goal here? For you to pay the proper amount of tax, no more, no less. One big thing that it seems a lot of my clients may be waiting on, if there is a third party, meaning another accounting or CPA firm preparing these, but is the Schedule K-1 from S corporations and partnerships. So I've recommended to my clients that about now to maybe put a feeler email request out to whoever they're getting that K-1 from, to just say, hey, what do you think the timing is. We don't want to wait also to get to final results, waiting on that Schedule K-1 coming to that taxpayer, to that client right before the deadline. If they anticipate that it's going to be late in tax season, or it's not going to even be till the summer, see, this is a great time to then ask, well, can we get an estimate of what you think will be on that K-1 so that you can be better prepared for what needs to get paid in, if anything, for April 18th to pay up any tax that's due related to 2022. Now, this is a little bit far in advance, but for S corporations and partnerships, those tax returns are due March 15th. What you would want to identify is what clients do you have that you know you're going to need to extend. Therefore, you better know who to focus in on now. Also, for those that have an S corporation or a partnership, that tax return due date is 1 month before the normal due date for a reason, so that that can be done and complete to then allow time for you or your partners or shareholders receiving that information to make the best decision on April 18th. If they have to then also file an extension, get in that extension payment. For those that have an S corp or a partnership, we know that there is the new regulation of filing a Schedule K2 and Schedule K3 for those that have foreign activities. The IRS has loosened this up in the sense of the responsibilities for the S corp and the partnership, in that if they do meet the exception, the domestic filing exception, then they don't have to prepare the Schedule K2 or Schedule K3, but they do need to include a statement on that Schedule K1 for anybody that might be relying on it to let them know that one is not going to be provided. But where the responsibility has been shifted is to that partner or the shareholder to request the Schedule K2 or Schedule K3 on or before August 15th of 2023 for tax year 22. Why is this important to think about now, though? Is that if somebody does need that, they probably are going to need it for April 18th, because it is typically related to those that are getting either a foreign income exclusion type calculation, or they're getting a foreign tax credit. So what we're doing is we're anticipating what partnerships and what S corps most likely have partners and shareholders that would need the Schedule K2, Schedule K3. And the reasoning for that is that when we're then preparing the return and in that file, in that tax return preparation, we can at the same time more efficiently just get it done instead of waiting. If you're unsure, then ask the partnership or shareholders, do you think you're going to need them? That may require, though, that a touch base with the client, who then has the relationship with the shareholders and partners. So avoid being near April 18th and having now a rush or a panic or trying to put together Schedule K2 and Schedule K3, especially on returns that you've already prepared and put to bed and sent to the client. It is more efficient to just take care of it all at once if possible. Things are heating up related to cryptocurrency. Well, nothing new related to that. And I mean related to tax compliance. Now, I don't think if you're in cryptocurrency, you need to necessarily be worried you're going to get audited. But the reason I mention that to you is that with cryptocurrency, it does need to get reported if you're involved with it. It's a question that you answer on page 1 of Form 1040 that all Americans do need to answer that question. The other is, though, if there was any sales of cryptocurrency, well, that's a capital transaction compared to then the sales price, if you will, the fair market value, compared to what you bought it for or got it for. The cryptocurrency companies right now don't have the same responsibilities as other investment companies to track that cost basis. So for those that are involved with it, the heat going up on that means that there's a bit more responsibility on your end to figure out what that cost basis is, which can take a little bit of time. So if you're involved with cryptocurrency, another encouragement to definitely not wait to try to determine your tax consequences or the information that you're needing to actually report that income and any cost basis related to cryptocurrency. Now, for those that have students that are in college, you would want to look carefully for this specific form coming out that you should have by now. It's called a Form 1098-T. I'll give you a link to things related to this educational tax credit. So there's two that we get to potentially take advantage of, the American Opportunity Tax Credit and the Lifetime Learning Credit. I am going to give you a link in the body of this video to an extensive video that I did talking about this, but know this, the American Opportunity Tax Credit is for the first 4 years of college. It is up to $2,500 tax credit, and part of it is refundable. So with a Lifetime Learning Credit, that's then really somebody taking advantage after the first 4 years. And it is up to $2,000 in that tax credit, but it's not refundable. If you had the choice of picking one over the other, you would take that American Opportunity Tax Credit. Easier to get to the maximum credit. It's also a higher credit and partially refundable. So be sure to check out the video related to that. And I'll also give you a link related to what the IRS has told you about getting this credit. For those that are getting refunds, a few things to note. Really, you should avoid getting a tax refund anticipation loan. Biggest reason why is that the IRS is turning around refunds very quickly. Now, the IRS just opened up the e-filing season, so I don't know of anybody yet that has gotten any refunds that have already filed, but we're still in the first days of tax e-filing part of tax season. So normally what the IRS has said in the past is that it's 21 days. It can definitely be quicker than that. The other thing I want you to note here is that you can go to the IRS website to track your refund. It's called Where's My Refund? And you put in some basic information. You now can actually track refunds back 2 years, including amended returns. So I'll give you a link related to that. For those that are getting refunds, I am going to note to you that most of my clients don't get refunds. Why? Well, is it because I'm a lousy tax preparer? Well, quite the opposite. What we do is planning, and what we ensure is that our clients are not paying much more in than they're required. I would just simply rather my clients have their own money. So when you're getting refunds, it is wonderful. It's a good thing. But typically what that means is that you overpaid your taxes throughout the year. You paid in too much. And therefore, when you're getting a refund, it's not the government giving you money. It's just you're getting your own money back. Now, there are certain individuals that qualify for credits that provide for a larger refund, one of those being the Earned Income Tax Credit. The IRS has put out some awareness information that I'm going to give you a link to that to ensure that people know. 20% of Americans actually qualify for the Earned Income Tax Credit, but very few are taking advantage of it. So take a look at that. Yes, it is meant for the lower income, but there is now expanded ways for those to qualify. Now, that is something, though, that if you are getting that credit, you know it, you can anticipate it, you actually can adjust withholdings to account for that with your employer. So you need to visit with them related to that. So even if you're getting large tax credits, they're leading to large refunds, and you actually can say, I didn't pay any tax in, but I'm still getting a refund because of these credits. Great. But still, you could have taken advantage of that throughout the year versus waiting to once a year of getting that refund. So it's just about being smart with your own money. We also know that the IRS has been in the headlines with hiring new agents. Now, we shouldn't be afraid of that because really the IRS has been loading up on customer service agents. So I'm hoping that as we see this tax season, it'll be a little easier to get a hold of the IRS. Maybe things will process a little quicker because they will be then more equipped with those that can help with those matters. So with that also being said, if you do have any information that you're trying to get from the IRS, you might also consider setting up an account with the IRS. So I'm going to give you a link to that where you then can see the information that's been reported by third parties to the IRS that match up to your Social Security number. Also, you're able to see the details from the past tax returns that you filed, as well as then track your refund. So it's a little bit more informative to you about your taxes versus just the tool of tracking your refund. So I'm going to give you a link. You should consider setting that up. It is only available right now for individuals and fellow tax pros. You really should consider setting up a tax pro account for that same reason of ease of information access on your clients, as well as getting power of attorneys filed much easier and cleaner and quicker. Because if you have an online account and they have an online account, then those two can be connected with that power of attorney form, but quicker and easier. This is the time of year that many ask, how long should I keep my tax documents? And the answer is 7 years. And the reasoning for that is that you're wanting to back up what it is that you reported for income and expenses. So the tax documents that you want to retain are those that are related to that. Now, if you've bought assets such as a home or stock, well, you want to keep those documents until you sell that home or sell that stock, for example, and then keep all of that documentation for 7 years after that. If you do anticipate owing, then face the music now in determining that number. Now, April 18th is the deadline. So the other thing I want you to note is that many will say, well, I want to wait to file my return because I don't want to pay until April 18th. Well, know this, even if you e-filed your return right now and it showed an amount due, you still have until April 18th to actually pay it with no additional penalties or interest. So again, no reason to wait, even if you know you're going to owe. But it would be better to know that number so that you can set that money aside or be sure that you have it. Because also, if you owe, then you definitely need to consider whether or not you need to pay estimated quarterly taxes for 2023, and first quarter for 2023 is due on April 18th, the same time that any tax you owe for 2022 is due, meaning there's two different taxes that you're paying in on April 18th. Now they're the same kind of tax because it's income taxes, but one being related to 22 and the other being related to 2023. So it's better to know what your number is now, so not only are you prepared, but then you don't start falling behind and you're prepared to make first quarter for 2023 on time and avoid any kind of underpayment penalty. Just wanted to mention another, because I am seeing in comments that there is a lot of news or headlines right now about there being a national sales tax. The only comment I'm going to make related to that is that it won't affect 2022. So you don't need to wait to file your taxes for 2022 thinking there's going to be now a sales tax. If that ever came to be, that would only be at a point in time moving forward. It's not going to be something retroactive. There's also headlines talking about abolishing the IRS. Well, there's still the IRS, so you still have your filing requirements. There's no reason now to sit around and wait to see what's going to happen as it relates to 2022, because that year is closed, done. You do need to file. There is still the IRS. They're still going to want that information, collect it, and either send you a refund or get the taxes that you owe. As I mentioned, I'm doing a weekly update, but as you can see, these include tax tips of what is to come. So hopefully you got some good information. If you missed the first 3 weeks that I put out the weekly recap, in the body of this video, I'm going to give you a link to go back and rewatch those as I give you tips for the self-employed. Those are in real estate, additional items related to S-Corp owners, individuals, partnerships, all the things that we're dealing with right now, benefiting you as either a taxpayer, small business owner, or tax pro. So hope that you'll tune into the rest of the remaining weeks. We only got 11 recaps left to go, and be tuning into my live show where I'm here to answer your questions. So by going to the main page of my YouTube channel, you'll be able to see when the next scheduled live is. Also, I've got a number of playlists, things that you should look at. I've got a tax seminar that you can get instant access to. It's well over 3 hours as a PDF. You can rewatch it through the end of this year as many times as you would like, but it talks through all the things that in depth you need to be thinking about this tax season related to doing one thing: paying your fair share of tax. No more, no less. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. All right, you have a great one.
JJ, the CPA is here. Let's go, let's go. Yeah, yeah. Money, 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 money. You know what it be. Tell them all I do is work. Cause money never sleeps. You never met a